Our next guest is one of the giants in Florida real estate, not to mention a big set of holdings in L.A. and New York. We've been focusing a lot on that sector lately, from sky-high interest rates to the reluctance of employees to return to their office. Joining us now, the billionaire investor, Jeff Greene. Jeff, it's great to see you. Welcome.
Good morning, Robert.
So you were famous for predicting the housing crash in 2008. You bet against that, made a lot of money from that trade. I want to talk about commercial real estate. You have a lot of commercial real estate, especially in Florida. You've got a couple of towers going up there, I think over 200,000 square feet that's going to come online. What do you think the commercial real estate market looks like, not just in Florida, but nationwide?
Well, those towers actually, Robert, over 1 million square feet. Just the office space alone is 200,000 square feet.
Right.
Look, I think commercial office space globally is going to go through a major change. What we've seen during the pandemic is, you know, the people have adapted the way to a different work style where they can use Zoom and Teams and other methods to get the same amount or more work done than they used to do going to an office. So there's no question that there'll be less demand for office space going forward. And couple that with the fact that we've just had an economy with trillions and trillions of dollars injected into it, which has really caused a lot more demand than we would normally have for office space. So now that's being pulled back, and that coupled with the way people work is going to cause a contraction in demand.
Yeah, and how bad will that contraction be? I was talking to a family office yesterday that said they had been offered a couple of big trophy office buildings in Manhattan, but they said the prices just weren't low enough for them to bite yet. How bad is it going to get with commercial real estate? And where are we in terms of the cycle of discounting or maybe even opportunities?
I think we're just in the first inning of this correction, Robert. I hate to say it, but I mean, basically, you got to understand that at the end of the pandemic, which wasn't that long ago, there was an extra $2.1 trillion in people's savings accounts. That's extra $2.1 trillion. In March, it was $500 billion. Now it's $190 billion. As that disappears and completely evaporates from people's bank accounts, all that money, there's going to be a lot less money to spend. So what's that going to mean for demand for everything, retail, office, apartments? Every aspect of real estate is going to get whacked. And I think we're just in the first inning. As far as the trophy properties go, of course, they're not getting heavily discounted. They probably never will. Look, I understand it's Warren Buffett's birthday. Happy birthday, Warren. But I can quote Warren. And one of the greatest things he ever said that I heard was, always better to buy a great company or great property at a fair price than a fair property at a great price. So those great properties and those great trophy properties, they probably haven't come down a lot, and they probably won't come down a lot. And if somebody's goal is to accumulate and acquire, world-class assets, they need to buy them sometimes when they just come down a little bit. But I think when it comes to the B and the C properties, the worst is yet to come.
So we've seen discounts already of, let's say, 10, 15%. Are we going to see discounts of 50%? Are we going to see buildings just turned over to the banks? I mean, what does it look like in terms of the bottom for this market?
Well, look, when it comes to some of these office buildings in markets where there are just no tenants, I think there'll be no bids. I think it's going to be at the point look, after I did the subprime trade, I went back in and was buying some of the subprime mortgage-backed securities, and I was getting 22 and 30% yields on conservative assumptions. I think you're going to say the same thing will happen in the retail and commercial sector, because there will just be office buildings with no tenants whatsoever in markets where brand new buildings like the one we're building in West Palm Beach will get the tenants, because we'll be the new tallest building in Palm Beach County with all kinds of great amenities. And some of the older buildings just won't have any tenants at all. And if there's no tenants at all for a prolonged period of time, that paper will be worth next to nothing. But, again, for repurposing the buildings and otherwise, there will be value there. So, I would say, hold on to your cash and get ready, because there'll be some, my guess is in the next, 12 to 24 months, you're going to see some extraordinary opportunities to buy.
Is that what you've been doing, Jeff, in the 12 months leading up to this, hoarding cash, getting ready for some of those things?
Yes. I mean, we get calls. And again, if somebody offers us a property, a strategic asset that's next to something you already own, we'll look at it. But otherwise, the door is closed as far as buying other property, because, you can just see that things are still very good in the economy. You look at the numbers today. I mean, the employment numbers are good. Why wouldn't they be? there's trillions of dollars still sloshing around from this irresponsible Fed and irresponsible Congress that just, had reckless fiscal and monetary policy. And we're still living off of that. And we will be for a little while longer. But at some point, the well's going to run dry. And that's when you're going to start to see some real opportunities.
And I'm surprised, Jeff, to hear you say that you think residential is going to get whacked as well. You have about over 8,500 residential units between L.A., New York, Florida, New England. One of your properties in Manhattan just rented for $125,000 a month. And we have record rents here in Manhattan because there's no inventory on the sales side. What's going to bring the residential side down? And why are you pessimistic about residential real estate?
Look, Robert, in Manhattan, it's a unique market. I mean, there's no question that in Manhattan, I mean, there are people that make millions of dollars a year. They have private equity companies where they're getting fees. And so if they need an apartment, some of those people can afford. The guy who paid $125,000 a month for the apartment in the building you're showing on the screen, is in the crypto world. So, they have easy money that they're spending. But in the real world, for most Americans, what's happened is the wages have gone up a lot because we've had a booming economy. We own hotels in Palm Beach. We've had to pay, our chefs were making $16, $18 an hour before the pandemic. After the pandemic, and they were making $26 an hour with signing bonuses. Well, all of that happened because of the trillions and trillions of dollars that was thrown into the economy. As that goes away, you're going to have unemployment. You're going to have people making less money and these high rents. The other thing that's happened, certainly in Florida, which is where we have the biggest position. And again, I want you to know, I mean, I'm the biggest believer in West Palm Beach and Palm Beach County, where I'm probably the biggest investor. But I can tell you, the demand that we've seen there is a direct function of what happened during the pandemic. As everyone knows, the feeder cities to South Florida, New York, Boston, Philadelphia, Washington, D.C., those cities had to close down during the pandemic because people have to ride subways and live close together in high-rise buildings. So people from those cities were going to go to Florida, a lot of them. And what happened is anyone who was going to go to Florida into the 2022 or 23 or 24, 25 or 26, they all said, you know what? We can't go to work in New York or Boston anyway. I can get my job done on Teams or Zoom or whatever. Let's move now. So we borrowed a huge amount of demand from the future. Remember, the calculation was easy, too. You could sell your home outside of Boston or in Greenwich at a high price as people flocked to the suburbs during the pandemic.
So you think that migration is over between the Northeast and Florida, or certainly is largely done?
Absolutely. Because, again, people could take and sell that house in Greenwich and buy a house in West Palm Beach with a 3% loan. Now they have to sell the house in Greenwich with a 3% loan and buy one in West Palm Beach with a 7% loan. So, of course, it's going to slow down. Long term, I love South Florida. For the next few years, it's going to be very tough, and we're very overbuilt.